We're so accustomed to crediting the Star Wars franchise for Disney's good results, but this time it's not Star Wars, it's Avatar.
It's the Avatar theme park or the attraction that they've opened in one of their theme parks. I mean, the theme park business every single year continues to turn out high single-digit, low double-digit earnings
like an unsung
every
hero.
year. It's a very unsung hero, and they continue. It's not unsung within Disney. They continue to invest a tremendous amount of capital. They just opened Shanghai to the tune of $5 billion. So they continue to invest across their theme parks because the returns are very solid.
We got some news on Disney's plans for ESPN and its digital offerings. What have we learned from there?
$4.99 a month for this ESPN Plus, which will give you highlights, scores. If you're an authenticated customer of a cable system, you'll get all the existing
So hold on,
programming.
you can't have cut the cord then.
Well, you can get the Plus for $4.99, which will give you all the non-program, the sports programming, the games, the live games that are not on the ESPN networks, and they say they have thousands of hours of games. I'm not sure what sports events there are, but so there's going to be a lot to choose from on the direct-to-consumer app, and this is just the beginning. But what we did learn today is that the price point is $4.99.
It's quite interesting. I'm just looking at the breakdown of the individual businesses here, and we're just talking about the performance of the theme parks. The operating profits are higher by 21%. Actually, that's the only Disney business posting higher operating profits. I mean, we know the weaknesses, the concerns that we've got in the broadcast TV segment, but just looking across there, it's quite illuminating.
Well, you know, one of the big areas, one of the reasons I think the stock is up because people are, in fact, looking to 2018 and 2019.
Yeah,
exactly. Particularly on the film slate, they're going to do a lot more films released in calendar year 2018 and 2019 versus 2017. Of course, they're going to have all of the, Star Wars films, more Marvel films, more Pixar films. So it was a relatively low output year in calendar year 17. So the comps look really good for calendar year 18 and into 19, so that should fuel growth coming out of the film entertainment business.
And of course, you've got the creators of Game of Thrones working on the next Star Wars movie as well, so that'll bring the crowds coming as well. Talk a little bit about how the film business aside, because that's a very hits-driven business, how Disney is positioned with Bob Iger at some point getting ready to hand over the reins. We haven't really identified his successor, although he's indicated he's going to step down at some point. Yeah,
he will, and he just kind of re-upped for a few more years.
Yes.
Partially, it was actually due in part to the pending acquisition of the 21st Century Fox assets. And Rupert Murdoch says, I'll sell you my company, or the big part of my company, but I want you to run it for a few years, Bob. So Bob will be there for the next several years, but that is clearly something that this company has not done, this board has not done well. It has to happen over the next 3 years, but clearly the focus for this company and for Bob is to close the acquisition of the Fox assets and then take those assets, put them with Disney, and help that fuel some of these direct-to-consumer over-the-top offerings that they have. That is the future of this company. They have to execute well on the ESPN direct-to-consumer app and on the Disney app.